Okay. Now I'm supposed to say, that's interesting, but then you say,
But what?
but you already know what I'm going to tell you.
I'm not the one.
Sorry, kid. You got the gift, but it looks like you're waiting for something.
January 16th, 2026. Let's go over the strategy and talk about what happened on Friday. Before the market even opened today, so we don't have this data because this is today, Friday. Before the market opened, all we had was this data right here to look at and to use as a reference for where is the momentum going. So it's very obvious the momentum has been decreasing. The sellers are gaining control. We've got downward pressure building. This is what we knew before the market even opened, okay? So let's go to the market open and let's talk about the strategy and see what we did that day. We had an awful lot of trades this day, and every trade I took is denoted by the yellow lines, where the purple lines are trades that my intuition was telling me to trade, but I did not act on. The yellow lines are the trades that I actually took. I made a big mistake today, and we're going to talk about that first. Then we're going to go over just the strategy in general. Market opens right here, and we have some upward pressure. It keeps hitting this upper limit right here. Do you see this? Look at this. Every candle's 2 minutes. So for the first 10 minutes, we touch this area. What is this red line, do you think? That red line is the previous, it's the pre-market high. That's what that red line is. The pink line right here is the previous day's high, but this pre-market high is this red line right here. So when we get a market open and when we see the price action playing around with pre-market lows and pre-market highs, it's important to pay attention. Notice how a candle never finished above that pre-market high. It's trying, it's fighting, it can't do it. It starts to reverse direction. We're getting the momentum displayed right here. It's starting to reverse direction. And at this point, you should be thinking, when it starts reversing direction, at this point you should be thinking about the daily momentum that we just discussed. We said the daily momentum was primed to the downside. We see the price action fighting to defeat the pre-market high, and it's failing. And now we've been given this sell-off. The 5-minute twins, the 5-minute extended hours and the 5-minute regular hours need to be in harmony before we can take a trade. That's the strategy. These two data sets, specifically for the first hour of the market, they need to be in harmony. They need to be showing the same data. So what is this showing us? Well, we've got upward momentum at this point right here. Right when the sell-off starts to begin, we've got upward momentum in the 5-minute regular, and then the 5-minute twin is losing momentum to the downside. But that's not in harmony. They're not showing the same thing yet. So by the time we get a little bit further, look, the 5-minute momentum for the regular data set is now falling to the downside in harmony with the 5-minute extended chart. Okay, so now we've got a harmony building. This would be a high-risk entry. You could literally just enter here, honestly, and just hope that the momentums are going to continue to stay aligned. But we wait for the other confluence, which is a volume bar greater than the previous three, aligned with the momentum on the 2-minute data. So this was an entry to the downside, which would have been a grand win, meaning the price action never would have come back. You would have just printed money the rest of the day. Right here, this is your entry. Volume bar greater than the previous three. That's it right here. This next bar right there, that's it. Right at the close of the candle. Your stop loss would be right above that entry candle, somewhere above that entry candle, and you would target a 2-to-1 ratio for your first profit target, allowing your runners to continue running. Normally selling 80% of your position at the first profit target and allowing the remaining 20% of your position to continue running to hit different profit targets. So now we're going to go over my mistake. I waited too long. Okay, my first trade was right here on this yellow line. Why? I waited because I wanted to be safe, because I was being driven by fear and hesitation. I wanted to wait for the 5-minute regular to flip over to the downside. The 5-minute extended was already well into the red, telling me, hey, it's okay, you can take a trade, it's fine, we're selling off right now. But the 5-minute regular was like, no, we're not ready yet. That's what my mind was telling me. But as soon as it started to break momentum right here, as soon as it started to break these critical levels, this, for sure, I should have just said, okay, now's the time. Which is this part here that I just referenced, right when these candles started getting a power volume bar confluence. Even this one, look at this massive selling candle right here on the right side. So my point is, I waited too long, entered here, this orange line, right at the close of this candle. Price action went up, hit my stop loss, and then continued selling off. Look how crazy that is. It literally went right to my stop loss. And that was a loss. And then the price action continued to work. And as soon as it touched that orange line again, I said, no, I'm not going to let this move happen without me. I'm getting back in. So I got right back in right here at the close of this candle, but I got in at the orange line. So I didn't wait for the close. I got in at the orange level that I entered previously. And this was a win, so we got the win, so that's nice. Made some money back. And then right here was my second trade of the day. Why did I take this trade? The 5-minute data sets are giving us permission to take trades to the upside. We've got expansion above the middle line. We've got strong growth, strong momentum data. And then what do we see here? We see the momentum going against the trade. You can't take a trade yet. You cannot take a trade yet, but boom, we get a little pop-up right here. See this variance differential? Going down, that's a pop-up. Going down, that's a pop-up right there. This pop-up has a volume confluence, a volume bar greater than the previous 3. So that's my entry signal. My entry was right here at the close of the candle. I put the stop loss slightly below. And look, it almost hit my stop loss. It really did almost hit my stop loss. This one was even it was closer than I would have hoped for, but it luckily didn't hit my stop loss that I selected. It could have hit, though. This could have been another loss, technically. But I got lucky, and it just barely missed my stop loss, and then I went to take profits at the 2-to-1 region. So that was a win right there. And then right here, I left a note to myself, perhaps it's time to look at using the previous candle as a stop limit, or just increasing the stop a little, because I was getting nervous about getting stopped out. And then what happened right here? We get a pop down. So we're going up, we get a pop down, we get a volume confluence. Our momentum has been selling off on the 5-minute, giving us permission to take trades to the downside. So I entered right here at the close of the candle, and my stop loss got hit basically immediately. Had I used the previous candle, which is why I made that note to myself, had I used the previous candle high for a stop loss, then I might have stayed in the trade. But regardless, my strategy, the one that I'm talking about now, also got a loss right here. So that was another loss. And then for the rest of the day, I didn't take any more trades in TQQQ. I took a lot of other trades today in other tickers, TSM, NVIDIA, Tesla. I took many trades today because after this loss, right here, after this initial loss, it tilted me for some, I'm still developing as a trader, so it's just part of the game, And I got tilted, and I even remember saying to myself, I remember this thought so vividly. As soon as I lost this trade, I thought, I'm going to trade all day as much as I can. I literally thought to myself, I'm going to attack many stocks today and take as many trades as I can with my strategy. I'm not going to avoid the middle of the market. I usually avoid and I don't trade the middle of the market. But I was like, no, I'm going to trade many stocks today, and I'm going to trade throughout the whole day from open to close, and I'm not going to stop. And I ended up taking 9 trades today. So 4 were in NASDAQ. So the other 5 trades were in like NVIDIA, Tesla, TSM, Taiwan Semiconductor. So I took a lot of other trades, but regardless, that's the trade recap for Friday, January 16th. And I will see you in the next one. Take care now.